Question 1. General insurance concepts. Which of the following best describes the principle of indemnity in a health insurance policy? A. The insurer promises to pay a set amount regardless of the actual financial loss. B. The policyholder receives compensation that places them in the same financial position as they were before the loss. C. The insurance company guarantees full payment of all expenses incurred by the policyholder. D. The insured is entitled to profit from the insurance claim as long as the loss is valid. Answer B. The policyholder receives compensation that places them in the same financial position as they were before the loss. Explanation. The principle of indemnity is fundamental to insurance contracts. It ensures that a policyholder is compensated for their actual financial loss but not allowed to profit from an insurance claim. The goal is to restore the insured to their pre-loss financial state. Option A is incorrect because paying a set amount regardless of loss describes a valued policy, not an indemnity policy. Option C is incorrect because most insurance policies have limits, deductibles, and exclusions that may prevent full payment of all expenses. Option D is incorrect because insurance contracts prohibit profiting from a claim that this would lead to moral hazard. Relevant rule. The concept of indemnity is embedded in Oregon's insurance regulations, which prohibit policies from allowing insureds to profit from claims. Question 2. Medical plans, scenario-based. Dr. Evans is a primary care physician participating in a health maintenance organization, HMO, network. Lisa, a member of the HMO, wants to see a specialist for a chronic back condition without going through her primary care doctor. What will most likely happen if Lisa directly visits the specialist without a referral? A. Lisa will be covered for the visit as long as the specialist is in the HMO network. B. Lisa will have to pay out of pocket for the specialist visit because HMOs require referrals. C. Lisa's visit will be covered if the specialist agrees to bill the HMO. D. Lisa will be partially reimbursed for the visit under her out-of-network benefits. Answer B. Lisa will have to pay out of pocket for the specialist visit because HMOs require referrals. Explanation. In an HMO health maintenance organization, plan members must choose a primary care physician PCP who acts as a gatekeeper to other healthcare services. The PCP must provide a referral before the insured can see a specialist. If a member bypasses this process, the visit is usually not covered and the patient must pay out of pocket. Option A is incorrect because HMOs require referrals for specialist visits even if the specialist is in-network. Option C is incorrect because billing alone does not guarantee coverage without a proper referral. Option D is incorrect because HMO plans do not typically offer out-of-network benefits. Relevant rule. According to Oregon state regulations, HMOs must adhere to network referral protocols to manage healthcare costs and ensure coordinated care. Question 3. Disability income and related insurance. Which of the following riders allows a policyholder to increase their disability income coverage in the future without providing evidence of insurability? A. Waiver of premium rider. B. Cost of living adjustment COLA rider. C. Future increase option FIO rider. D. Residual disability rider. Answer C. Future increase option FIO rider. Explanation. The future increase option FIO rider gives the policyholder the right to increase their disability income benefits at specified intervals without needing to prove their health status. This rider is beneficial for policyholders whose income may increase over time, ensuring that coverage keeps pace with their financial needs. Option A is incorrect because the waiver of premium rider ensures that the policyholder's premiums are waived if they become disabled, but it does not allow for future increases in coverage. Option B is incorrect because the COLA rider adjusts benefits based on inflation, not income increases. Option D is incorrect because the residual disability rider provides benefits when partially disabled person can still work but earns less than before the disability. Relevant rule. Oregon's insurance regulations require disability policies to offer certain riders and provisions to ensure adequate coverage for policyholders as their circumstances change. Question 4. Group health insurance. What is the primary difference between community rating and experience rating when determining group health insurance premiums? The community rating is based on the overall claims history of a specific group, while experience rating is based on the general population's claims history. B. Community rating takes into account the average claims cost of all groups in a region, while experience rating considers the specific group's own claims history. C. Experience rating applies only to individual policies, while community rating applies only to group policies. D. Experience rating allows insurers to adjust premiums based on the policyholder's income, while community rating does not. Answer B. Community rating takes into account the average claims cost of all groups in a region, while experience rating considers the specific group's own claims history. Explanation: in group health insurance, community rating sets premiums based on the average claims cost across all groups in region or market, whereas experience rating bases premiums on the specific group's claims history. This distinction is critical for understanding how insurers calculate risk and premiums. Option A is incorrect because the definitions of community and experience rating are reversed. Option C is incorrect because experience rating applies to both group and individual policies. Option D is incorrect because income is not factored in determining health insurance premiums under these methods. Relevant rule: Oregon regulations require insurers to use either community or experience rating based on the type of group being insured. Question 5. Individual health insurance policy general provisions. Which provision in an individual health insurance policy allows an insurer to adjust a policyholder's benefits if they were found to have misstated their age? A. Entire contract provision. B. Misstatement of age provision. C. Reinstatement provision. D. Change of occupation provision. Answer B. Misstatement of age provision. Explanation: the misstatement of age provision allows an insurer to adjust the benefits payable under a policy if the policyholder's age was misstated on the application. The adjustment reflects what the premium would have purchased at the correct age. Option A is incorrect because the entire contract provision states that the insurance policy and any attached documents constitute the entire agreement between the insurer and the insured. Option C is incorrect because the reinstatement provision refers to restoring lapsed policy. Option D is incorrect because the change of occupation provision adjusts premiums or benefits based on occupational risk, not age. Relevant rule: Oregon law mandates that the misstatement of age provision be included in all individual health insurance policies. Question 6. Accident and health insurance basics. What is the primary purpose of the coordination of benefits (COB) provision in health insurance policies? A. To ensure that the insured receives double benefits when covered by more than one policy. B. To limit the total benefits paid to the insured to prevent overinsurance. C. To allow insurers to deny coverage if the insured is covered by another policy. D. To prioritize which policy will pay first when an insured has multiple health policies. Answer D. To prioritize which policy will pay first when an insured has multiple health policies. Explanation: the coordination of benefits (COB) provision establishes which insurance policy pays first when a person is covered by multiple health insurance policies. This prevents duplicate payments and ensures that the total benefits do not exceed the actual cost of care. Option A is incorrect because double benefits are not allowed under COB rules. Option B is incorrect because limiting benefits is a consequence of COB, but its primary purpose is to prioritize payment. Option C is incorrect because insurers cannot deny coverage solely because of other coverage. Relevant rule: COB is regulated under Oregon administrative rules to avoid overinsurance and duplicate claims. Question 7. Medical plans scenario-based. Jennifer is enrolled in a preferred provider organization PPO plan. She needs to see a specialist but prefers to visit a doctor who is outside of her PPO network. What will likely happen in this case? A. The visit will be covered in full as long as the doctor is licensed. B. Jennifer will pay a lower copayment if she uses an out-of-network specialist. C. The visit will be partially covered, but Jennifer will pay more for out-of-network care. D. Jennifer cannot see out-of-network specialists under her PPO plan. Answer C. The visit will be partially covered, but Jennifer will pay more for out-of-network care. Explanation: in a POP, members can choose any doctor or specialist, but they receive higher benefits when using in-network providers. Visiting an out-of-network doctor results in higher out-of-pocket costs. Option A is incorrect because full coverage is generally provided only for in-network care. Option B is incorrect because lower copayments apply to in-network visits, not out-of-network. Option D is incorrect because PPO members can see out-of-network specialists, albeit at a higher cost. Relevant rule: Oregon law requires PPO plans to clearly outline network and out-of-network coverage rules to avoid confusion. Question 8. Disability income and related insurance. What is the presumptive disability benefit in a disability income insurance policy? A. A benefit that applies only if the insured loses the ability to work in their own occupation. B. A benefit that applies only if the insured has total and permanent paralysis. C. A benefit that assumes total disability if the insured suffers a specific type of loss, such as blindness. D. A benefit that requires the insured to be under the care of a physician for at least 12 months. Answer: C. A benefit that assumes total disability if the insured suffers a specific type of loss, such as blindness. Explanation: a presumptive disability benefit is triggered when the insured suffers specific catastrophic losses, such as loss of sight, hearing, speech, or limbs, and it is automatically assumed that the insured is totally disabled. A relevant rule: Oregon disability income policies must include presumptive disability provisions to protect policyholders in cases of severe impairment. Question 9. Oregon health insurance regulations. In Oregon, what is the free look period for individual health insurance policies? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer: B. 10 days. Explanation: in Oregon, individual health insurance policies must provide a 10-day free look period during which the policyholder can review the policy and cancel for a full refund if dissatisfied. Some policies, like Medicare supplement policies, may offer a 30-day free look period. Question 10. Types of health insurance policies. Which of the following is an example of a limited benefit plan? A. Major medical insurance. B. Disability income insurance. C. Long-term care insurance. D. Cancer insurance. Answer: D. Cancer insurance. Explanation: limited benefit plans cover specific conditions or services. Cancer insurance is a supplemental policy that covers expenses related to cancer treatment, but it does not provide comprehensive health coverage. Question 11. Group health insurance. In Oregon, how many employees must a business have to qualify as a small employer under group health insurance laws? A. 1 to 50 employees. B. 2 to 50 employees. C. 10 to 100 employees. D. 25 to 100 employees. Answer: A. 1 to 50 employees. Explanation: under Oregon law, a small employer is defined as having 1 to 50 employees. Group health insurance policies for small employers must comply with state and federal regulations, including guaranteed issue rules. Question 12. Oregon state continuation of coverage. How long can an individual maintain continuation coverage under Oregon state continuation laws after leaving job? A. 6 months. B. 12 months. C. 18 months. D. 36 months. Answer: B. 12 months. Explanation: Oregon state continuation coverage law allows individuals to continue their health insurance coverage for up to 12 months after leaving job, provided they meet the eligibility requirements. Question 13. Health maintenance organizations. HMOs. Which of the following is a key characteristic of an HMO plan? A. Freedom to choose any healthcare provider. B. Higher out-of-pocket costs for in-network care. C. Coverage for preventive care services. D. No requirement for a primary care physician. Answer: C. Coverage for preventive care services. Explanation: HMO plans emphasize preventive care and require members to choose a primary care physician (PCP). Members must use in-network providers to receive coverage except in emergencies. Question 14. Scenario-based question. Coordination of benefits. David is covered under 2 health insurance plans, one through his employer and another through his spouse's employer. If David files claim, which policy will be considered as primary coverage? A. His spouse's plan. B. The plan that covers him as an employee. C. The plan that covers him as dependent. D. The plan with the higher benefit payout. Answer: B. The plan that covers him as an employee. Explanation: when an individual is covered by multiple health insurance plans, the plan that covers them as an employee is considered primary, while the plan that covers them as a dependent is secondary. Question 15. Disability insurance. Which of the following is a common exclusion in disability income policies? A. Accidents. B. Illnesses. C. Self-inflicted injuries. D. Pregnancy. Answer: C. Self-inflicted injuries. Explanation: most disability income policies exclude coverage for self-inflicted injuries, war-related injuries, and injuries sustained during the commission of a felony. Some policies may cover pregnancy-related disabilities. Question 16. Oregon Health Plan HOPE. What type of individuals does the Oregon Health Plan HOPE primarily serve? A. High-income individuals. B. Retirees over 65 years of age. C. Low-income residents. D. Self-employed individuals. Answer: C. Low-income residents. Explanation. The Oregon Health Plan (OPIS), a Medicaid program that provides healthcare coverage to low-income residents in Oregon. It covers services such as doctor visits, hospital care, mental health services, and prescriptions. Question 17. Long-term care insurance. In Oregon, what is the minimum benefit period for a long-term care insurance policy to be considered compliant? A. 6 months. B. 12 months. C. 24 months. D. 36 months. Answer B. 12 months. Explanation. Under Oregon law, long-term care insurance policies must provide coverage for a minimum benefit period of 12 months to meet state compliance standards. Question 18. Medicare supplement policies. Which of the following statements is true regarding Medicare supplement policies in Oregon? A. They are mandatory for all Medicare recipients. B. They cover the cost of prescription drugs. C. They help cover gaps in Medicare coverage. D. They are only available to individuals over the age of 70. Answer C. They help cover gaps in Medicare coverage. Explanation. Medicare supplement policies Medigap are designed to fill the gaps in original Medicare by covering deductibles, coinsurance, and copayments. They are optional policies available to individuals enrolled in Medicare Part A and Part B. Question 19. Oregon Health Insurance Portability Rules. Under Oregon's health insurance portability rules, a pre-existing condition exclusion cannot be imposed if the individual has had continuous coverage for how long? A. 30 days. B. 63 days. C. 6 months. D. 12 months. Answer B. 63 days. Explanation. Oregon law prohibits insurers from imposing pre-existing condition exclusions if an individual has had continuous coverage for at least 63 days without a significant break in coverage. Question 20. Health insurance policy cancellation in Oregon. Which of the following reasons allows an insurer to legally cancel a health insurance policy in Oregon? A. Filing too many claims. B. Reaching the age of 65. C. Non-payment of premiums. D. Developing a chronic illness. Answer C. Non-payment of premiums. Explanation. Under Oregon law, an insurer can cancel a health insurance policy if the policyholder fails to pay premiums. Insurers cannot cancel policies due to age, illness, or claims history. Question 21. Oregon Mental Health Parity Law. The Oregon Mental Health Parity Law requires health insurers to provide coverage for mental health services that is A. Optional for the insured. B. Limited to a certain number of visits. C. Equivalent to physical health coverage. D. Only available through government plans. Answer C. Equivalent to physical health coverage. Explanation. Oregon's mental health parity law mandates that mental health and substance use disorder services must be covered equally to physical health services without discriminatory limitations on visits or coverage. Question 22. Preventive services in Oregon. Which of the following preventive services must be covered by health insurance policies in Oregon without cost sharing? A. Cosmetic surgery. B. Vaccinations. C. Infertility treatments. D. Elective dental procedures. Answer B. Vaccinations. Explanation. Under the Affordable Care Act and Oregon law, insurers must cover certain preventive services, including vaccinations, annual checkups, and screenings without imposing cost-sharing requirements. Question 23. Scenario-based question pre-authorization requirements. Linda needs a non-emergency surgery that her doctor recommends. Her insurance policy includes a pre-authorization requirement. What should Lina do to ensure her insurance covers the procedure? A. Proceed with the surgery and submit a claim afterward. B. Ask her doctor to contact the insurance company for pre-authorization. C. Wait for her insurance company to contact her. D. Pay out of pocket and request reimbursement. Answer B. Ask her doctor to contact the insurance company for pre-authorization. Explanation. In Oregon, many insurance policies require pre-authorization for non-emergency procedures. The healthcare provider is usually responsible for submitting the pre-authorization request to the insurance company. Question 24. COBRA continuation coverage. Which employers are required to offer COBRA continuation coverage to eligible employees? A. Employers with 20 or more employees. B. All employers, regardless of size. C. Only government employers. D. Employers with 100 or more employees. Answer A. Employers with 20 or more employees. Explanation: the Consolidated Omnibus Budget Reconciliation Act (COBRA) applies to private sector employers with 20 or more employees and requires them to offer continuation of health coverage to eligible employees after a qualifying event. Question 25. Oregon Health Insurance Marketplace. What is the name of Oregon's state-based health insurance exchange? A. Health Connect. B. Cover Oregon. C. Oregon Health Exchange. D. Healthy Oregon. Answer: B. Cover Oregon. Explanation: Cover Oregon was Oregon's state-based health insurance exchange. However, it transitioned to using the federal healthcare.gov platform for enrollment after initial challenges. Question 26. Medicare Part D. Medicare Part D provides coverage for A. Hospital stays, B. Doctor visits, C. Prescription drugs, D. Dental care. Answer: C. Prescription drugs. Explanation: Medicare Part D is a voluntary prescription drug plan available to Medicare beneficiaries. It covers prescription medications through private insurers. Question 27. Scenario-based question: coordination of benefits. John has two health insurance policies. A primary policy through his employer and a secondary policy through his spouse's employer. He receives bill for $2,000 after hospital visit. How will the policies coordinate to pay the claim? A. The secondary policy pays the full amount. B. The primary policy pays first and the secondary policy covers the remainder. C. Both policies split the bill equally. D. Only the primary policy pays. Answer: B. The primary policy pays first and the secondary policy covers the remainder. Explanation: under coordination of benefits, COB rules, the primary policy pays first and the secondary policy covers the remaining balance, subject to policy terms. Question 28. Oregon's Insurance Division. Which state agency regulates health insurance in Oregon? A. Department of Health. B. Oregon Insurance Division. C. State Medicaid Office. D. Oregon Consumer Protection Agency. Answer: B. Oregon Insurance Division. Explanation: the Oregon Insurance Division, part of the Department of Consumer and Business Service (ECBS), oversees insurance regulation, including health insurance policies, to ensure compliance with state laws. Question 29. Children's Health Insurance Program (CHIP). The CHIP program in Oregon provides health coverage to A. Senior citizens, B. Pregnant women, C. Low-income children, D. Individuals with disabilities. Answer: C. Low-income children. Explanation: the Children's Health Insurance Program (CHIP) provides health coverage to children in families with incomes too high to qualify for Medicaid but too low to afford private insurance. Question 30. Health Savings Accounts (HSAS). Which of the following is true about health savings accounts (HSAS)? They can be used with any health insurance plan. B. Contributions are tax deductible. C. They are only available to individuals over 65. D. Unused funds expire at the end of the year. Answer: B. Contributions are tax deductible. Explanation: HSAS are tax-advantaged savings accounts available to individuals with high deductible health. Contributions are tax deductible and unused funds roll over year to year.